Now, after months of bliss, financial markets have started to turn extremely volatile. After the crash on Friday last week, a subsequent reversal this week saw markets oscillate between gains and losses. 6 days of volatility across assets show a deeper anxiety taking hold amidst credit fragility fears. Broadly, the narrative this week was around the back and forth in thread and pushing between the U.S. and China on their trade policies. Gold extended its blistering rally to new peaks, with the yellow metal hitting an all-time high of nearly $4,400 before retreating on Friday. Still, gold closed out the week with about 6% gains. Brent crude fell over 1% last week and is now down about 25% since President Trump's inauguration. Cryptos extended their slide with $600 billion erased on Friday. The digital assets saw about $2 billion in liquidations, adding to the record liquidations of $20 billion in the week prior, which wiped out over 1.6 million traders. Unlike past crashes, there was no retail rush to buy the dip, just silence. Now, turning to Asia-Pacific stock markets, the seesaw in U.S. and China trade rhetoric hits Chinese and Japanese stocks. However, the recovery in Indian stocks extended to the second week, with the blue chip Sensex index gaining nearly 2%. Indian stocks reached their 52-week highs and are poised for record highs. The OC index also showed a modest gain of 0.4% after the country touted rare earth minerals investment bid. In the Americas, Wall Street stocks ended the week with a tidy gain, extending a bull market that's already added $28 trillion to its value since April lows. The S&P 500 ended the week 1.7% higher despite a revival in long-dormant fears about hidden credit losses after bankruptcies and fraud-linked write-downs hit banking stocks. The bounce in stocks sent Wall Street benchmarks to their best week since August. President Trump's retreat from the tariff threats boosted sentiment for a Xi meeting and a trade deal later this month.
I think we're getting along with China. China would like to have something. As of this moment, we'll be meeting in a couple of weeks. We'll be meeting in South Korea.
You think
myself.
Will go forward?
I think so. It looks like it's going forward. I think so. They want to meet. We like to meet. I have a very good relationship with President Xi, and we're going to see what happens.
Canadian and Brazilian stocks too gained on expectations of better trade deals with the U.S. The Canadian index gained about 1%, with tech, consumer, and industrial stocks leading the rise. The Brazilian Bovespa rose nearly 2%. Gains in industrials, electric power, and public utilities sector led the index higher. Across the Atlantic, the surprise move was the gains in the French stock index. Despite budget worries, the French CAC gained over 3%. However, that optimism did not translate to the German and UK indices. The German DAX took the biggest hit, with 1.7% losses for the week. On the other hand, the South African index showed modest gains with a nearly 0.6% rise. Now, having looked at market moves, let's now turn to the overall economic outlook. Let's take a look at how the Asia-Pacific region is doing. In Asia, India still remains the brightest spot. China's economy continues to show a loss of momentum. Beijing faces deflation risk, a recession in its real estate and consumer demand. U.S. trade wars continue to weigh on Japan and Australia, with the outlook for most of the other regional countries in the negative. A slowdown in global trade from U.S. protectionism is likely to offset any green shoots from domestic policies in Asia. In the Americas, the government shutdown is delaying the release of much-needed data. Now, the problem is to piece together the economic jigsaw puzzle from other sources. Other data reports released are not looking great. Weakening business activity and cooling jobs market will likely push the Fed to cut rates again this month and in December. The outlook for Canada, Brazil, and Argentina is also negative because of Trump's trade rhetoric. In Europe, the situation looks much worse. From deepening troubles in controlling budgets, France is not likely to meet its budget target, with politics compelling economic disaster. UK continues to struggle to fill a budget black hole, and Germany is losing its shine as the growth engine. For most European countries, the best news will likely be that they avoid a recession. However, easing trade tensions could boost the region's outlook. Trump and Xi's meeting this month will likely shape the next phase of the global economic outlook.
I think that things have de-escalated. We hope that China will show the respect that we have shown them. And I am confident that President Trump, because of his relationship with President Xi, will be able to get things back on a good course.